Hello and thank you for joining us for today's market briefing. Today we will discuss how corporate earnings have recovered this year and take a look at where expectations are for next year. Not only have earnings sharply recovered since last year, but there has been a significant improvement from just 6 months ago. Let's start by looking back at how earnings estimates trended over the past 12 to 18 months. Here we see the sharp decline in annual earnings estimates as the pandemic unfolded, with estimates for 2021 earnings falling from about 190 to a low of about 160, about a 15% decline. And then as the pandemic progressed and lockdowns began to ease, we saw the overall trend in earnings expectations stabilize and begin to rise, with most earnings reports for the fourth quarter of last year coming in at better than expected levels. Fast forward to today and we can see that annual earnings estimates have continued to improve. From just 6 months ago, expectations for 2021 earnings have risen from about 165 to about 200, an over 20% increase. And earnings expectations for this year are now higher than they were before the pandemic started. This chart also shows the progression of earnings estimates for next year, 2022, highlighting the continued recovery and expectations for strong year-over-year growth. The driving factor for this improvement can be seen when looking at the more cyclical and economically sensitive sectors, seen here on the left side of the chart. If we look at the expectations from earlier this year and compare them to recent estimates, nearly all sectors have seen rising growth expectations. Many of the cyclical sectors that were hit the hardest by the COVID pandemic are now projected to have some of the strongest earnings growth. All total, we can see a sharp increase in earnings growth from the S&P 500 companies and how it almost doubled from 23% to 42% growth in just 6 months' time. As we look ahead to earnings for 2022, the more cyclical sectors are expected to continue to improve, but some are beginning to slow in their recovery. For example, the industrial sector has an expected earnings growth of 34% for 2022, while in 2021 it is estimated to see an over 100% rebound in earnings. In contrast, forecasts for earnings in the financial sector are now expecting a 6% decline for 2022, compared with expectations for earnings growth of over 50% for 2021. But overall, most sectors are showing the promise of a continued climb upwards as we head into next year. Putting this all together, we see that annual earnings estimates are overwhelmingly higher than we saw at the prior peak in 2019, roughly at 150. This jump in earnings estimates is a promising sign of the economy's overall recovery, even despite the surge of the COVID Delta variant recently. For now, the threat of another lockdown does not seem likely, and concerns over inflation are easing, signaling a continued positive outlook for earnings expectations. And we know that stock prices tend to follow earnings over time. Earlier this year, earnings were lagging the rapid increase in stock prices, leading stock valuations to well above average levels. However, more recently, earnings have been catching up to prices, improving near-term return potential and supporting the outlook for stocks going forward as they grow into their valuations. As usual, we will continue to monitor the trend in earnings estimates as they remain a key factor in the outlook for stocks regardless of valuations. With recent positive increases in earnings expectations, the near-term fundamental outlook remains promising as well. From all of us here at RMB, thanks for tuning in, and we hope you're able to join us for our next market briefing.